warned about the redheads. Redheads, girls named Tiffany, hairdressers. Well, one day is Thursday, August 14, 2025, and this is the week and charts. Obviously, I want to thank all you guys and girls for attending today. I appreciate you taking time out of your busy schedule. I am going to have to get better at getting the word out on this. It's every Thursday, and if you go to davelandry.com/webinar, you can register there. You can also watch it live on my YouTube channel. All right, we're going to talk about, well, current market conditions. Boy, I'm pretty excited about the market. Check back often. A few days ago, my wife was like, well, you were feeling so good about everything yesterday. What happened? It's like, well, shit happens is what happens. But anyway, your questions on trading, just feel free to punch them in. Your favorite stock and crypto picks. I just had USD passed behind each crypto pick. So today I'm going to talk about the methodology in action. Mostly that's what we'll focus on. And we'll pick up on a million little things and some of these other things. I have a couple of things I really want to get into. I have for next week and weeks beyond, I have a mind the trade presentation that's in the back of my head. But this week, I was consumed with a methodology in action. That's super important. And I believe I'm going to show you here the missing piece. And I think that's important, very important. It's something that I was missing, and then it'll make sense in 1 second. We have an ogre, some damage control, squeezing out additional profits, dead money, just tons of stuff, and why it pays to attend Dave Landry's The Week in Charts. There's a disclaimer screen. As you know, you can lose money trading, or as often summing up, all predictions are about the future, and a lot of stuff can happen between now and then. Thank you, Greg Morris, for giving me that. There's my contact information. If you need to reach me, you can also reach me at dave@davelandry.com. All right, let's talk about the mystery charts and the methodology in action. As I've been saying quite often, when I have a big hunk of the show that's methodology in action, I always feel like that's kind of boring. It's not too exciting, but it is exciting. And that's because this is how we actually make our money. And early in my trading career, the missing piece was the show me, and I got very lucky, and maybe luck and whatever else, but hard work, luck. Anyway, just being positive and hanging in there, vitally important, and I'll have to come back to that someday. But the missing piece for me was nobody showed me how to do this, and people would tell you about patterns, and they might show you some huge trade or something, but they really didn't show you the trade ahead of time. They didn't tell you what their thinking was, and then they didn't show you how they managed it, and that was really the missing piece. And early on in my career, I got very lucky, and I was able to work with some traders who actually traded and helped them out with programming and eventually stock picking on things of that nature, and even some ghostwriting, which is off the record, so I didn't say that. But anyway, so here's one that was it's not a mystery chart because it came up intra-week. Now, you'll see what happened here in 1 second. But the mystery charts come directly, or 99% of them at least, come directly from a trading service. It was in a fairly nice, persistent uptrend. It did have some wide range bars here and there, but for the most part, it was a pretty good looking setup. And notice that it began to accelerate higher, a nice little TKO type of move. Now, based on the risk of this trade, because it was an IPO, and because of some of the occasional big wide range bars, a little all over the place at times, I decided not to make an official setup. And there's the parameters down below, and I had it mentioned as an honorable mention. So let's see what happens. Entry's there, stop is there, just kind of almost a textbook TKO type of setup. Textbook TKO is when you have the trend knockout bar and it's wide enough and the close is poor enough to where you can pretty much just get in slightly above the high and then stop out slightly below the low. If it makes it all the way back to the high, then you might have a bona fide reversal. And if it doesn't, then no capital gets put in the harm's way. So it's textbook in very ways. It's textbook in being obvious. It's textbook in how you trade it. And also has the nice characteristic of either it works or it don't, right? So initial profit target way up here. So let's see what happened. Nothing. It absolutely imploded. But here's the good news. No capital was put in the harm's way. I am shocked at how many times a stock doesn't trigger and keeps me out of a lot of trouble. I'm not going to tell a story that I've told over and over again about people emailing me and then telling me I recommended this turn, and I say, no, I didn't recommend that. And I'm like, yeah, you did 6 months ago. And I'll go back 6 months ago and I'll think, look at it and it's like, well, it never triggered. So this one will probably be 10 cents 6 months from now, and somebody's probably going to email me and complain. Well, hopefully not, based on all I'm preaching. So I'm not going to tell that story. We have a smoke 'em if you got 'em report for this week. It just happened a few minutes ago, so that's pretty excited. Smoking if you got 'em is take partial profits. This is SLDP, a former mystery chart. So a mystery chart is shown before it triggers. It's something that I show in my service, and then it's something that I show before it triggers to show you my thinking ahead of time on these things. Nice accelerated uptrend, nice little pullback, almost textbook in nature to the 30 EMA. If all you did was trade Landry light pullbacks in trending markets, there's a little caveat there, a little disclaimer, right? I think you would do really well. And there's all your parameters down below: 385, 285, 45, entry, protector, stop, initial profit target, respectively. Entry's there, stop is there, initial profit target up here. Anyway, let's see what happens. Rallies along, and bam, this morning it bangs it out with a little bit of vigor. So when that happens on the hypothetical 100K account, I do take these trades in a model account, FYI. You would take partial profits when you're up 1,000 per 100K or 1%. Now, what I want to show you here is yesterday it came within 2 cents of the initial profit target. It happened like very late in the day, and I didn't have an alert at that level or a limit order because I messed up on this trade getting into it. I got in sort of late, so I was trying to squeeze out a little bit more profits. But if you did follow the original plan, as I should have, I'm admitting guilt here, right? Then within 2 cents of an initial profit target is pretty darn close. So make sure you lock that in. Now, I didn't lock it in, again, because I was looking for a little bit more in the position. My alerts were much higher. But anyway, when it gets that close, make sure you lock and load. So there's 1580 open on the remainder of the position based on this mark to market. Now, what I like to do, and I did this in accounts outside of the model, and I may occasionally do this in the model account too, just to show you how it's done. But what I did this morning is like, okay, well, this thing's moving nicely. It's above where the IPT should be. So what I'm going to do is I'm going to put in a trailing stop on half, and I'm just going to keep it pretty tight, just 10 cents, because it had already begun to rally. And then when it began to rally even further, I got in my mind, I'm thinking, okay, well, let's open it up a little bit more to 15 cents. And the idea here is you're already above that initial profit target, okay? And then when you begin trailing that stop, and that trailing stop is around your initial profit target, then you sort of, or where you're supposed to be within the system, okay, within the initial profit target, then you could maybe squeeze out a little bit more profits by letting that stop open up intraday. This is exactly what we do with the longer term positions. KTOS, I hope I have a chart for that. I should have a chart for that. That's one we've been in for quite some time. And that one, the stop is really, really wide. It's going to hurt when it gets hit, believe me, but we're already taking partial profits. And we're sort of playing with the market's money, so to speak. We're free rolling, as Charlie Kirk calls it when he saw my money management. Anyway, so then it's like, well, I've got this thing's a pretty good run here. If I could get at least $5 out of it, I think I could go ahead and open it up a little bit more. So open it up to 20, and that would mean $5 if I got stopped out. Then I opened it up to 25, and then it really began to take off. So I said, well, let me just give it 30 cents and let the chips fall where they may. Now, the idea, again, on squeezing out these additional profits, you've already exceeded your additional profit target. Now you're just looking to squeeze out a few more cents and hopefully a few more dollars on the position. And it did stop out. And ideally, you want that stop wide enough to ride out a correction and, of course, have the stock turn back up. And that's where we were on the daily chart. And we're just taking that same philosophy and putting it into an intraday chart. Now, you're never going to get top dollar in a trade, so don't beat yourself up too much. If you want, I'm happy. If you're going to minimally monetize down to that stop, okay? And a stop here was at 530. It's like, okay, if I get 530 out of this, I'm going to be pretty damn happy on the position. And obviously it didn't happen, but hopefully next time I do this, we could ride out that correction and then ride it all day long. And by the end of the day, get out. Now, if you are doing this, and let's say the thing just really takes off, and you decide, you know what, I don't want to look a gift horse in the mouth. I'm going to go ahead and take those profits. I got an extra point out of the position on something like this, which would be like 25% move in one day or something. Yeah, by all means, lock and load if you want to do that. But I kind of make it a game where it's like, okay, I want to try to ride half of this position all day long, and I'm going to get out on the close, and hopefully much higher than the initial profit target. But anyway, so I got out at 530. The original profit target was 485. So the difference between those is 45 cents, which on a $4 or $5 stock, that's huge, okay? So that's a $450 improvement per 100K in one day. Now, you know, you don't want to do fuzzy math, but that's like $113,000 a year. Don't quote me on that, but it's somewhere there. I know, it doesn't happen every day, but my wife's always saying, what's that thing you do? You always do annualize. It would be fun though. The dog is crazy. We have a puppy. It's like 10 months old now, but it's still crazy. It's a red golden. We were warned about the redheads. Redheads, girls named Tiffany, hairdressers. Anyway, she's crazy, and so I'm outside just trying to wear her out a little bit in the middle of the day. And it was like 30 minutes into the trading day, and I was mentally monetizing how much money I made, and if I could just do that for 100 days, what I was going to buy, and all this other great stuff. And then it came in and lost my ass. So you got to be careful with the mentally monetizing. Little side lesson there. But anyway, this little discretion here can really squeeze out additional profits. Now I showed you two different discretions. I don't want to talk out of both sides of my mouth. This is two different separate events. Okay, one event is it came very close to initial profit target. By all means, lock and load. Okay, but if you didn't do that and you come in today and this thing really starts to get going, then you say, okay, hang on a second. I have a chance to make more than initial profit target, so I'm going to go ahead and let it ride a little bit. Now, yeah, in the end, you did give up some open profits, okay, but it comes with the territory, and you have to be willing to do that. Like Mike Moody said one time, because momentum usually ends badly, as I often talk about. And I asked him about that. He was talking about momentum, and I'm like, okay, Mike, my only problem with momentum, and I'm a momentum guy, I'm a trend following moron, is that it ends badly. And is there anything you can do about that? And he's like, Dave, when you have a baby, you can have a lot of baby poop. Babies are cool, babies are nice, don't get me wrong, but you're going to have a lot of baby poop. So you're going to have a lot of poop with your trades. You're going to have these drawdowns to open profits. Okay, we have a mystery chart review, and that is ABCL. Kind of a gradual uptrend, and then it began to accelerate a little bit higher. Lots and lots of Landry Light. Again, another Landry Light pullback. I think if all you did was trade Landry Light pullbacks in bull markets, okay, I think you would do just fine. And I was thinking yesterday, like, well, how would you define a bull market? It's like, well, let's just say if you're within 10% of all-time highs, then you're in a bull market, kind of like the TFM 10% system does. Anyway, pull back to the moving average. Nice little nearly textbook type of Landry Light pullback. There's all the parameters down below. Entries here, stop is here. There's our profit targets here. So let's see what happened. So far, not a whole lot. Kind of triggered on the fast move. It's just chopping around a little bit. We're underwater a little, maybe breaking even so far on that one. Oh, down 340 based on this chart snapshot. Now here's another mystery chart update. This stock had nice persistency, lots and lots of, you guessed it, Landry Light. Persistency, as I preach, just the market's ability to go up day after day after day. And if you could draw a line through most of the bars, which is mathematically equivalent to linear regression, I just like to draw lines, you know what I mean, I keep it easy, then that's a good way to illustrate, so to speak, the linear regression. Pull back to the moving average, Landry light pullback. There's all your parameters down below. Entries here, stop is here, initial profit target is up here. So we did hit the initial profit target. Now, yesterday, you could see we had this huge gap higher and this huge push higher. It's like I almost would rather a stock take its time. When it just melts up like that, it's always fun, and everyone gets excited, the present company included. But you're much better off with a stock that's a little bit more gradual in its trend, because everybody kind of rushes in, and all of a sudden, when it doesn't materialize, everybody kind of rushes out, which kind of sucks. One thing I was kind of toying with, but I don't want to create too many moving parts. But if you guys have done this, or anybody watching this recording has done this, let me know in the comments below, or let me know if you're here live, and maybe we could discuss it a little bit, and we could talk about it at some other point in time in more detail. But I'm wondering if you can maybe, you know, something like this is up 20% or whatever pre-market, you know there's a very little chance it's going to stick, right? And I wonder if I'm overcomplicating things, but I'm wondering if you can maybe sell some calls against your position, because there's a good chance that it's going to come back in. And I'm just talking about a small part of your position. You're already taking partial profits, okay? So you're free rolling, but I forget how many shares we had on this one, probably a couple thousand at least. Oh, just 800. Okay, so say you've got 800 shares and you come in with an open like this. Could you sell a couple call options out of the money? And if this thing implodes like it did, then shut down those call options. You still have your position, and at least you picked up a few $100. I know it's a lot of moving parts, but the problem with that, the one glaring problem that I see is ideally, we want to be in these trades for a long time, and we want a nice big fat position, okay, which is half of the original position. So round number, well, in this case, you put on 800 shares, you take off 400 shares, okay, and it would be great to have on a lot of shares if this thing goes to 20, 30 bucks a share or whatever. So you are giving up that opportunity cost by scaling out a little bit, but it almost seems like a gift horse. So I'm a little torn on that, and maybe we could talk about it a little bit and figure it out. But anyway, you bank 1,000, your stop goes to break even, and that way, barring overnight gaps, you're free rolling on that. And as of this mark to market, there was 692 open, and this number might have changed a little bit. So $676 total on the trade, or thereabouts. Okay. And now for something a guru has never shown you. This would be a losing trade. Anyway, accelerated uptrend once again, bigger picture cup and handle, as we talked about quite a bit. Also an IPO, so there's some excitement there. One thing I was thinking about as going live is, yeah, it sucks that it stopped out, but whenever you stop out in a trade, go back and do the forensics and ask yourself, would you have taken this trade again? And my answer is absolutely. And I think from being in this educational and, I don't know if I'd call it advisory business, but information providing business, it forces me, I don't want to look like an idiot, okay, and I don't lose money either, but it forces me to make sure that I really like a stock. It won't have any regrets down the road. And if I do have regrets because it lost, it's like, well, I did the right thing, and then I shout next, okay, and go on to the next trade. I was going to make a big part of today's show on that, but there's too much going on with the methodology. So let me just show you the methodology in action, and then you could kind of glean some of these things that you can kind of pick up some of these things I'm putting down. Anyway, nice little Landry light pullback, cup and handle, entries there, stop is here. Now, it did move a little bit in our favor, so that stop got bumped up just a smidge, and then it stopped out, okay? It happens. So we're risking 2% per 100K, that's $2,000, and because that stop went up just a little bit, we lost a little bit less than 2% on a trade. Now, There's the loss down below, $1,834 or 1.84% on the entire account. Now, when it comes to using discretion, we talked about a little discretion earlier. If it's 483, you're looking for 485 or whatever the number was, 583 or 585, I forget. It's okay to take profits a little bit early because you're almost there, and sometimes the market gets really, really close but doesn't get there. You know, it's like the market doesn't work at exacts. And I remember we were in a stock years ago, and the stop had, I think the stop was, I don't know if it was the original stop or whatever it was, the stop was at $8 a share, and the stock went to $7.99. Now it had a print there, but I'm not sure that it actually had a trade there, but technically that stop was hit, okay? And someone said, well, how come you didn't just place your stop at $7.99? It's like, well, nobody is that good, okay? So you have these, I don't want to call them rough parameters. There's fairly solid parameters to work around, but you have to be willing to give them just a little bit of wiggle room. So discretion is not like pulling a stop and hoping. Discretion might be pulling a stop, let a market open, see what happens, and then either bail out or put in a stop at an uncle point, a point where you can't take any more pain to get you out of the position. So in this particular case, you can see it hit the stop, and what I did was I let it open because it got whacked the previous day. I knew I was probably going to get whacked on the open on this one, but I figured, okay, let's just let it open. Let's see what happens. And if this thing starts to implode, this is with a discipline. You really need discipline. You just have to close your eyes and sell, okay? And maybe put in, God forbid, but maybe put in an airbag type of order further down just in case it gets away from you. Anyway, once it opens and begins to establish its opening range, then you could add in a little bit of wiggle room to the stop. And you can do two things. If it has a reversal during the day, you can get at a higher level, or you can stick with it as a position trade. Now here's BTM. This is something else the gurus never showed you. And again, nice little pullback, almost a Landry-like pullback, acceleration, just a good looking stock, right? Entries here, stop is down here, initial profit target is up here. And you can see it stopped out for, what's that, an 1,800 and a half loss, okay? So then you shout next and you move on. The secret to trading success is moving from one failure to another without any loss of enthusiasm. And that's was going to be part of the presentation that I was going to do, which I'll just put off for a few weeks. We'll get to it. And that's Churchill, for those of you who have heard it before. But you do have to watch that you're not becoming the definition of insanity, is doing this, which is doing the same thing over and over and expecting a different outcome. And that's Einstein. But as long as you can look back at a trade and say it was persistent, it was accelerating, it looked good, the pattern was there, the setup was there, it traded cleanly, and all those other things that I spent, I forget how many hours, 14 hours talking about in the stock selection course, little soft sell, I guess. But the point I'm trying to make is there's a lot to it, but there's a lot of simple things to get you started, okay? The main thing you need to know, the 90% you need to know is like that much, and then the other 10% is a lot, okay? Which you only need to know once you know the basics. But if you can go back in time and say, you know what? Yeah, you could drop an F-bomb, but if you go back in time and say, well, that really looked good, I did the right thing, no regrets. Now, again, I use a little discretion on this one, and I'm not saying, again, throw caution to the wind. But this thing was getting absolutely annihilated pre-market, okay? It was down with a 3 handle, way, 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 way down here. I said, okay. I'm going to get creamed on this one, but it's probably overdone. I don't know that, okay? It could go to zero by the end of the day. I got out of a little Chinese stock that I got creamed on not long ago, and I forget where I was in it. I'll just pull a number out the air. It's probably in it at like 7 or whatever, and it was down around 4. and I felt like an idiot exiting at 4, and by the end of the day, I was like at $1. Okay, so I didn't feel like as much of an idiot by being prudent and getting out as I should. But in a case like this, it's getting whacked so hard. It's like, okay, let's just see if it's overdone. Let's see if some bargain hunters step out. Let's just see what happens. And then it did improve tremendously by the open, but it was still at or below the stop. And what I did in this case, same thing with the VG, is it's like, okay, well, let me just pull the stop. Let's see what happens. And then once that opening range was established, I put in a stop below the low of the day, and that became my uncle point. So again, don't throw caution to the wind, but sometimes in these damage control situations, especially if it's really getting cream pre-market, you can let it open, see what happens. Try to keep your head while everybody else is losing theirs, right? And then go in and replace that order. Here's another mystery chart update. This is KTOS. And it's hard to really see how great the setup looks because the chart is now this big as opposed to where it was back then. But if you back the chart out to the middle of July, you'll see it was a nice Landry light pullback. Again, pull back to the moving average. And there's the setups, the parameters right here, 43, 36, and 50. Entry is here, stop is here, initial profit target is up here. So when it hits that IPT, again, you're gonna bank 1,000 per 100K, get that stop up to break even, and then gradually let that stop open up as the market moves in your favor. You're adjusting to ride out the longer term volatility. And as I've said quite often recently, if you do this right, meaning that if you have a really good setup and you're capturing a market inefficiency, the volatility is going to increase dramatically and the price is going to increase dramatically. So as that price increases, point-wise, you're going to need a bigger stop. Also, if you're trying to ride out a longer-term trend, you're going to need a wider and wider stop. As I preach, that's why if you went in as a pure longer-term trend follower, then your results would be phenomenal and occasionally abysmal, okay? Not that we don't get whacked pretty hard, not that we don't have pretty serious drawdowns, but they would be far more worse if we weren't taking those partial profits. So that helps to mitigate the damage. And we're also adjusting to that longer term volatility slowly but surely as the price moves more and more in our favor. And I don't want to use the word hope, but hopefully we'll be in this stock for a long, long, long time. We'll see. I put the dates back in the spreadsheet. So if you're looking at give it about a week, if you're looking at the delayed versions, you'll start seeing the actual dates that we went in on these trades, and you can go back and look at them. And hopefully, again, we'll have dates going back for years in a couple of years. Anyway, again, this was dead money for a while, but then as of a little while ago, it was 37.57 open. So it's better than the poke in the eye. 47.57 total in the portfolio, which isn't too bad, better than the poke in the eye. Here's KGC. This was a gold stock. Triggered way back here in May, okay? Entry was there, stop was there, initial profit target up here. Now this became the mother of all dead money examples. It just went sideways, but it really didn't do anything wrong. It never actually traded. It had 1 or 2 days below the 30 EMA, but for the most part, it did okay. And by not doing anything wrong, I mean, didn't hit the stop. And I know it's tough. And as I say ad nauseum, if I wasn't putting out a trading plan every day, I would be less prone to follow it, okay? What does that mean? Well, it means that I'm telling you to stick with it, so I'm gonna stick with it so I could show you, after all is said and done, good and bad and different, how things shake out. And believe me, it's hard. That's a couple of months of sideways action. You feel like it's dead money. I guarantee you, because I've seen it many times before, most people will get bored with it and pull the money because it's not exciting. But you need to follow the plan. And this was many years ago, maybe 20 years ago. I put a stock on and it absolutely flatlined for like 2 months, but it just kind of creeped along, and it wouldn't go down. It just kind of creeped along, and then they got bought out overnight. And I'd actually rather a stock go up for 5 years than get bought out overnight, because the buyout is like a one-time payment. If its thing becomes huge, like an Amazon or what was that computer one a while back, SMCL or whatever, or a little sleepy coal company like we rode out for a few years, I'd rather ride out a stock for a 500% gain than get an overnight 100% gain, or whatever the case may be. But anyway, I received a few letters congratulating me, emails, I guess. They had email back then. Anyway, congratulating me, and they said, well, but I got bored and shaken out of it, so follow your plan. So anyway, stop goes to break even, obviously, and then as of this screen capture, we had 2,200 open. Here's another gold stock. Did we talk about? No, we did talk about this one. So this was kind of a double dead money report. This thing triggered and was slightly positive for a few days, looking okay, and then it implodes, but it didn't hit the stop. So follow the plan. I know, easier said than done. Used to be much harder for me, again, until I put my trading plan out there. So you bank 1,000, and then after that, it dies out for a couple of months. But then as of this mark to market, you've got 1476 open, so that's 2476 for the entire trade by sticking with it. All right, any questions on all that? I know I went quickly, but this is a lot of the same stuff I repeat each week. I'd encourage you to go in and watch the methodology and action portion of the weekly charts. I have a separate playlist just for those. I know it's not the most exciting thing in the world, but hey, the ultimate goal in this business is to make money and, of course, protect capital in between. And if you go in and look at the methodology in action, even if it's a little boring, you'll see how it actually works, warts and all. And if you go in and watch those old services, davelandry.com/archives, or YouTube/Dave Landry, go to the core trading service, and I have them on delay, and there's a few to catch up on that I'll catch up on soon. So they're only a few days old, depending on what happens. Once everything triggers, I catch the services up to current. So you can go in and see what's happening within a few days on that. And I would encourage you to do that too. Anyway, opening gap reversal is an intraday strategy. I try not to trade too much intraday. I probably do a little bit more than I should. Ideally, I'll tell you this, it's kind of like the Jimmy Rogers money line in the corner thing. If I just wait until I absolutely can't stand and I feel like I'd be stupid not to take an intraday position, I almost always make money. What kills me is the losing money in between. Just like I said, a couple of days ago, throwing the ball with the dog, thinking how much money I made, and in 100 days, I'm going to buy a car, I'm going to do this, or I'm going to do that, or whatever. And of course, God laughs at your plans. Went in, came back to the office and gave it all up. So there is a danger with this intraday stuff. You got to be really careful. And I would encourage you to be more and more selective. And years ago, I spoke at a day traders conference, and they really were day traders. Usually they say they're day traders and have one or two guys that day trade and nobody else. But this conference was filled with a bunch of day traders. Nobody, I think, was over 30 years old. I was the oldest fart by by a factor of 2 probably. And where I was going with that is these guys young and full of piss and vinegar and all. But what's interesting is one guy gave up and gave a speech, and he reduced his trading account, his trading activity. He reduced his activity by about a third, and he tripled his profits. So he became more selective. So I think that's the missing piece, is figure out how to become more and more selective. And one way to do that is you take a bigger picture daily pattern like this, and then you look to go in intraday for a piece. As I've said before, I knew a day trader many years ago. He would look at weekly, sometimes even monthly charts, and he would have all this behind him all set up, and then he'd go in and grab a point, okay, almost scalping like. Anyway, so this was J-Nug. I mentioned this in the Facebook group as a potential ogre. Now, keep in mind, if you're going to trade like AMD, I think we talked about last week, AMDL is what I used for my vehicle there. You want a much longer term trend, okay? And you want a lot more things like persistency, acceleration, all those other things. With the ETF, a little bit different story. ETFs are going to be a little bit more efficient. So if you have a fairly decent trend and trend like this one here, that's enough, and it's fairly persistent too. Notice that it went up for the most part day after day. Anyway, so you're looking to catch that reversal back into the direction of the trend. Things get a little overdone pre-market, and then the market comes back up. Not all the time, but often enough to make it worth trading. So anyway, I mentioned the Facebook group as an ogre, and here are the trades, a couple hundred shares, no big whoop, right? Just kind of S&G type trading, but bought it here, sold half here, and trail the stop up when that happens. And then I got stopped out on the remainder. And let's see if I have the actual trade. No. So this happened this is a 15-minute chart, within about 30 minutes of the open, and I was done with this for the day. And again, my goal was to get a small profit. I was looking for like 1.5, and then that trailing stop was at 1.5. And when these things work, here's one. This is one of my favorite intraday patterns, because I'm not staring at a stupid screen all day long. You watch the open, and in a case like this, it kind of does a little gyrations and ideally sells off a little bit first. Then you're like, aha, I'm going to put in an order above that opening range. Okay. And when you get triggered, you're like, okay, well, how much room is this going to need? And you probably need to do that math ahead of time. It's like, well, okay, about 1.5. So I gave it 1.5 below, which gives me 1.5 above initial profit target. So you set a trailing stop at 1.5. You set an initial profit target at 1.5 above your entry. Okay. And if that profit target gets hit, then you let it ride and let that trailing stop do its work. Now, if it really, really takes off, sort of like I did earlier with the SLDP, then of course you could open up that trailing stop a little bit more and try to make it all the way to the close and exit on the close. But if all I did was for the intraday stuff was just wait and wait patiently for these opening gap reversals like this, and something else that's very, very obvious, maybe like a Russian doll type setup where you have a pullback or a ledger-like pullback or something, and it begins to take off, and you look to get that first little push out intraday. If all I did was that, I probably would do okay longer term and not get sucked into other trades. All right, I just want to show you a reoccurring theme that I play with crypto. Now this is why it pays to watch the weekend charts, because last week in the weekend charts, and this is kind of a big ugly link in here, but I could throw this in the comments below once the recording goes up on YouTube. But at this point in time, I said, paraphrasing, that, oh, that one looks pretty good. I was doing this live analysis on the crypto, and I said, I'm going to put an alert in, and if that alert triggers, I'm going to buy it. So you know what I did? I did exactly what I said I was going to do. Why? Because I said I was going to do it. You know, if I was just looking at this thing and said, oh, it looks interesting, I might have forgotten. But I went ahead in the weekly charts. If you go in and watch it, I put an alert in at that level. And then when I got the zing, I'm like, well, I guess I got to buy this because I said I would. Now in crypto, I use a 20% initial profit target. As I said before, like in stocks, I probably should eventually adjust it to the volatility of the market. But 20% seems to be a good round number on these. So you sell half at 20%. And again, as I've said before, I'm taking a crumb off of these position and putting it to Bitcoin. It's actually beginning to add up, which is kind of cool. My ultimate goal would be to mine these shit coins and turn them into Bitcoin. It's the shit coin to Bitcoin thing. But anyway, so that one worked out pretty cool. And if you could just keep doing these over and over, rinse and repeat, eventually, like I said, it'll begin to add up. All right, let's go ahead and shift gears into crypto. And if anybody has any crypto pairs you want me to look at, or any questions, anything else, feel free to type them in. So we'll get crypto up and running. So here's the pairs I'm long. Again, this entry and then 20% additional profit target. This one's beginning to fail a little bit, so I might have to take some action on that. These crypto pairs obviously are super volatile. This is one I talked about in the Facebook group, and somebody was saying it was about right here when they saw it, and they said, well, it's already gone too far. I'm like, I still like it at that level. I still think it looks pretty good. Still think it has potential. And it's getting whacked today, of course. You do a show and it gets whacked, but this looks kind of good as a TKO. Write that down. If you were to trade this, put an entry above the high and a stop below this low. And if it doesn't trigger, no capital gets put in harm's way. Ripple have been riding this one for a while. It's back to around break even on this one. You can see it got away from me a little bit back here. So that's kind of a shame. Zora is the one we just talked about, a little bit of a TKO today, but so far looking okay. And then Pump, I think I bailed on this one. If I didn't, I need to think about bailing on it. I need to double check that. So shame on me if I didn't. But it did shoot up, hit the IPT, and come back in. And if it hits the IPT and scratches out, so what? I mean, she made money, be happy, move on to the next. Eventually, you will catch a trend in one of these bad boys. All right, let's take a look at Bitcoin. Bitcoin's getting whacked today, really bad. Outside day down. It's going to be a market, I think, that's going to have a lot of fits and starts. And I think every time it gets at these high levels, you've had so many people that have so much money from way back in the day. And think about the guy who collected I forget how many Bitcoins it was, but it was an absurd amount. And don't quote me on this, but it's probably $100 million worth, or maybe $1 billion worth now. I don't know. That collected the Bitcoin for the pizza. Pizza cost him, I don't know, I'll just pull a number out there, $50, probably only $25 back in the day. It was 2 pizzas, so $50, whatever. And if he kept those Bitcoin, it'd probably be worth $100 million today. So you've got people like that. You've got the guy who lost his hard drive, who threw away a hard drive with Bitcoin on it. And I saw a brief interview with him the other day, and I think that hard drive is worth $1 billion or more now. And if he never finds it, then that supply comes off the market. That's a different conversation altogether. But he was trying to buy the landfill, literally trying to buy the landfill so he can go in there and dig for it. But the point is, let's say he kept the hard drive, or someone like him kept the hard drive, and they've got $1 billion worth of Bitcoin. Well, they're going to be inclined to unload a little bit. Now, so I think that's part of the problem, is every time it hits these super high levels, it comes in a little bit, but still $117,000. And where was it? Back to chart out a little bit. Well, anyway, it was 25 cents or lower at some point in time, but you can see 117,000, nothing to sneeze at, because you can go all the way back down here when it was pretty low. 3,000, 4,000. I watch some of these guys. I know I say it every week. I swear I'm not going to say it anymore, but I will. They poo-pooed Bitcoin from 1,000, 2,000, 4,000, 10,000, 20,000. And I'm shocked, because if you're a trader, who cares? Okay, you just want a market to go up, and if it's going up, don't question it. As I say quite often, this one looks a little crazy, so I don't know what's happening here, but sometimes when the market's really gone, and again, use Bitcoin as your bellwether. So right now, Bitcoin's stalling out today. You're probably not going to find as many of these shit coins that are looking great. But you want to come in. Oh, I was looking at my charts are screwed up. Let me start that over. So you could actually sort by the relative strength, meaning today's strongest gainers. And this one looks kind of thin. That looks like it's taken off. And especially if Bitcoin is doing well, you'll do much better at this when Bitcoin is doing well. And sometimes you can just buy the strongest pairs. I'm going to hold off for today, but check back often, and let's see if some of these can follow through. Anyway, you want me to look at any pairs or anything? I'd be happy to do that. All right, let me jump into stocks. We'll take a look at stocks real quick, and then we'll answer any questions. Oh, by the way, I did talk about the Landry 100, but here's the Landry 100. And one thing I was thinking about as I went live, you would never buy a stock like this that was going straight up, but if you're going to buy 100 of them, you're going to catch some pretty decent moves. So this was bought on 729, and let's see right there. So it has to make a 1-year closing high, and that's my parameters now. I might throttle those back, as I've said quite a bit. So even ludicrous would say it's ludicrous to buy a market that overextended, but it's now going up another 130% from there. No money management in this. I am doing it, or done it a little bit, whatever the correct English is, with a very, very small amount of money. And in doing that, I put in 100% IPT. And then, like, just to show you, now, again, Landry 100 has no money management in it, but this one here got in the back here. It shot up at 100%. I took off half the profits, and then it got absolutely creamed. Okay, so shit happens sometimes twice. And by taking half off and getting a totally free position, right? It saved my ass on that one. And I'm if it goes to zero, then I broke even. But I think that if you were doing this portfolio in real life, you might have to adjust the parameters a little bit. We had one that was up 3,000% a while back, so that would be like 30% of your entire portfolio, 100 stocks, right? One up 3,000%. So you probably would want to scale back a little bit. And by the way, that would be a beautiful case for selling some absolutely ludicrous, like 200% IV or whatever they are, calls out of the money. You could have probably absolutely printed money on something like that, because it did implode quite a bit before we took it out of the portfolio, and it was like a 1,700% gain. I didn't actually take the trade, so I'm not bragging. I'm just telling you how this momentum thing works. But anyway, that's a Landry 100. And if you're in the Facebook group, I do supply the list when asked for it. And I also update it fairly often, nearly daily, in the Substack group, and I also include the pie chart of all the sectors. And that's kind of fun. I know you want to part of it, maybe. That's kind of fun to watch the shapes kind of shrink and get bigger to see where the money is flowing. And the other thing that it does is it helps you to find like some little tiny area that might be developing, like small scale nuclear or whatever. So I'm having a blast doing this. I quit doing it years ago because it was a pain in the ass and the market was choppy, and I regret that. That's one of my biggest, not my biggest regrets, but it's a certainly up there. But now I've been doing this for about a year or so. This has been a lot of fun, and this is a really good experiment. And if you look at some of the stocks in here, for instance, like SLDP, this is one we're long. Okay, so this one went in on 7.2. So there's another hidden benefit. Okay, 7.2 is right there. So I added it to the list. Now, it took a while to set up. I didn't get long until, I guess, this day here. Or actually, it was this day here, this big wide range bar. But you can see at least it gets them on your radar. All right, so that's the Landry 100. Let's hop into the overall market. Any questions, just let me know. All right, S&P 500. All-time highs yesterday, coming off a little today, but they could use a breather. So far, rallying nicely out of Landry light pullback. Ditto for the NASDAQ composite, almost a break even on the day, so that's better than poke in the eye. Here's what's exciting. The Rusty, today notwithstanding, the Rusty finally began to wake up. Now, it's getting whacked a little today, but at least it pushed into and slightly past this overhead supply, coming in a little. It's probably going to be not going to be a rout as it was the last couple of days, but it's looking better and better and better. So that's the Rusty 2000. Gold, the commodity, coming in a little bit today, back below the 30 EMA. Gold stocks have been outperforming gold for a while. You can see they've recently broken out, coming back in a little. We'll probably see a lot more gold setups. We have one on Landry list today. Biotech had a bang-up day yesterday. It's kind of flat fill today, but it's pushing through this overhead supply. as I've been saying ad nauseum, there's a lot of biotechs that are on an individual basis that are doing pretty good. Infrastructure broke out to brand new highs yesterday, getting whacked a little today, but so far, in general, trying to break out. Software is a bit of a bummer. It recently broke out and came back in. So all in great in the world, but most areas are looking pretty good. Defense, for instance, just off of all-time high. So that's certainly a good thing there. Pot stocks are just been on fire lately. They're doing fantastic, just kind of melting straight up. We had TLRY. I received a very nice thank you note. And by the way, if something goes well, let me know. I got one guy, if something goes wrong, he puts out a post for the whole world to see. But when something goes right, he emails me privately, hey, I want to thank you about that. I'm like, stop talking about the turds unless you're going to talk about them all. Anyway, TLRY was in the Landry list on this day, probably somewhere up in here, probably on this Landry light pullback. If you go back and look at the archives, you can see it. So we had a nice little double from there. So that's pretty cool. And it was kind of a cup and handle, super volatile type of stock, don't get me wrong, but I finally got a piece of that one. If I'd have taken the first trade that I wanted to take there, you might not be seeing my fat ass right now. It would have been a $2 million trade, potentially. I know it's hypotheticals, but I would have taken it, and I did not take it, and I feel like an idiot. We have John's working today, but he's like, stop bringing that one up because he missed it too. Anyway, take a look at this XME. This is metals and mining. Look at that. That's a beautiful textbook textbook Landry light pullback. Came down, touched the moving average, and just went straight back up from there. That's awesome. I wish they always worked that well, believe me. Retail today notwithstanding, broke out a little bit yesterday, made some new highs, so that's certainly a good thing. Robotics and automation right here, just off of all-time highs. So we're giving up a little bit today, but let's not get too caught up in that because overall things are still looking pretty good. Mags, there were a few people that were worried about mags not that long ago, but look at where they are now. A market will do what it has to do to frustrate the most amount of people, and it will often do the obvious in a most unobvious manner. All right, I think that's it for today. Let's take a look at financials real quick. Financials have been lagging a little bit. Look at the little toppy, but they've been improving a little bit as of late. I sure like to see a breakout and not look back. So as I said a second ago, all in great in the world. Few areas are lagging, but overall things still look pretty good. And somebody asked me about that. Well, what about these sectors that are lagging? Doesn't that mean that we're going into a bear market? It's like, no, not necessarily, and not just yet. And as I said, I kind of see it as glass half full versus glass half empty, because if those sectors begin to wake up, then I think we're going to be just fine. And I think the market will begin firing on all 8 cylinders, and we're really going to have a sharp move higher. It's like I don't want to blow off higher because those don't last, but I think we could have a substantial move higher. And I know there's a lot of ifs in that sentence. So the other thing too is new sectors are waking up. Like all of a sudden, pot stocks got hot. So that's a great thing. Crypto stocks got hot a little while ago. And so it seems to be a pretty orderly, I hate to use the word orderly when it comes to markets, but pretty orderly rotation so far. Gold stocks did really well. They took a little bit of a breather. Silver stocks took off. Some of the rare earths took off. So it's in there. They're kind of just a little bit of a rolling correction in between. So overall, things are looking pretty good. All right, any individual stocks? I'll give the software a minute to catch up. The Facebook has kind of eliminated the individual stock picking. We normally bring them up and talk about them there. All right, going once, going twice. Well, I'd like to thank everybody again for attending today. I appreciate you taking time out of a busy schedule. Anything unanswered, davelandry.com. If you like this video and you're watching YouTube, please like it. If you don't like it, go have no fun somewhere else. Leave a comment down below. I read and answer all comments. Everybody have a fantastic weekend. To you guys and girls at Facebook, I'll see you in a little while. Everyone else, again, have a great weekend. And hopefully I'll see all you guys and girls again next week. Thank you so much, and may the trend be with you. You're welcome.